So we have existing home sales coming out, and existing home sales account for about 85% of the U.S. economy. Okay, not U.S. economy, of the total home sales in the U.S. And as we discussed yesterday, it's the biggest part of the home industry. Of course, it's a very meaty chunk, but it's not very timely indicator, because existing home sale is officially calculated when the closing of the home is done. So, for example, this number is coming out for April, but these contracts may have been signed in January, and they're just closing now. So, logically speaking, it's not a very timely indicator, and it's very, very lagging by several months. But regardless of that, as far as we are concerned, we're not really concerned with the logic of the indicator as much. We're concerned at how much traders care about it and how the price moves. And this indicator, traders really do care about, and it can't move the price, it can move the dollar significantly. If the deviation is there, it can easily move it by 30, 40, 50 pips. So I think it's a good one to trade. Now, housing market on its own, I don't know if you realize this or not, but housing market, including all the things that go with it, such as building materials and furniture and all that stuff, it actually constitutes 25% of the total gross domestic product in the U.S. So when we saw housing slow down, we saw GDP dropping rapidly, and what happened last month with the existing home sales is that we saw the biggest drop in 18 years, since 1989. Last month, the existing home sales dropped, I believe, from 6.68 million to 6.12 million, which was a big drop of 8.5%, nobody have seen such a drop since 1989. So that also gives you an idea how stable this indicator is. A drop of 8.5% was actually only about 560,000, so 0.56 million, and it kind of shocked the market. So there's a lot of talk now that the housing bottomed out, saying that the only way it's up now, people are talking about that there's really not much more room for it to go down. The prices already went down. The prices already went down on housing. People are making good money. The ratio between income and house prices has improved tremendously in the last year or two, and everybody is expecting that the housing market will start rebounding. Of course, it doesn't help the fact that a lot of those subprime mortgage companies went out of business, and we had foreclosures increase by like 70% this time of year versus previous year this time. And of course, because of that, there's a lot of supply of homes being supplied to the market, and it's diluting the prices, and it's causing more trouble. So, and of course, because of so many subprime mortgage companies going out of business, the mortgage standards have been tightened. Now it's a lot tougher to get a loan. It's more expensive to get a loan, and fewer people can afford homes. But the bottom line here is, I think it's a good indicator, and I've set my triggers for regular and conservative, as you can see there in the trade plan. And even if my triggers are not hit, I may still take a trade for the after spike. Even if they're hit, I am going to be looking for a trade on the after spike. So we'll see what happens. There's no other reports coming out at the same time, so there should be very, we should be very clear of conflict. There shouldn't be any conflicts. I have my Awanda account set up. I actually have 2 pairs pulled up. As you know, I like to trade 2 pairs on Awanda with a hyperclick. And my picks for today are GBP USD and Euro USD. Actually, I really like where the Euro is, and I'm using 5 pips bounce for the regular triggers, and I'm using no bounce for the conservative triggers. And on my MB trading account, I'll of course use the limit orders like I always do, with 10 pips on the regular triggers and 20 pip limit order on conservative triggers. So let's look at some triggers more closely. I looked at expectations of about, I don't remember already, by like 70 different economists or so, and the expectations are very, very close. As you can see, they are expecting the housing to come out exactly the same as it came out last month, at about 6.12 million, and the expectations really ranged from high 5, so like from 595 to about 640. I mean, the most extreme ones. So they're all pretty close to one another within the 6.12 area. My triggers are set that if the housing comes out plus 0.28 million, or in actual numbers 280,000, or 6.4 basically, it would be a possible sell on GBP USD towards dollar strength. It will be second day in a row that we have a strong housing number, and it could be a nice little sell towards dollar strength. If the number comes out at negative 0.22, or actually 5.9, would be a possible buy in GBP USD. As you can see, my lower trigger is a little bit less conservative, because I do think there's a lot of room for the GBP USD to go up. Right now the prices trading are about 98.40. I think it could easily go up to 98.80 or so. And on the downside, I mean, we do have some strong level at 98.30, but I think it's bound to be broken if the housing sales hit my trigger, because it's too close to the current price. I think very possible we'll see 9800 being tested again on the GBP USD pair. And my conservative triggers of 20 pips limit basically are plus 0.56 and minus 0.56, and those would be big shocks. First of all, plus 0.56 would be a complete recovery of previous month's drop. Okay, remember we talked about previous months, it dropped by about 8.4%. Plus 0.56 would actually be a gain of about 8.4%. So it would show a very strong and significant rebound in the housing market, and I think that would definitely, I think it would be a very possible good short on GBP USD. On the other hand, if the deviation comes out negative 0.57, or an actual reading of about 0.65, I'm sorry, 5.65, that would actually be even a bigger drop than we saw previous months. I mean, such huge drop second months in a row would